I'm Chris Smith, the founder of Property Investment Contact. Just bringing this video to you in bringing you up to speed, all information on serviced accommodation. Because we source serviced accommodation across the UK and we also offer our management services for our clients, I thought I'd make this video just to bring you the pros and cons of serviced accommodation, what type of returns to expect, and a little bit on the benefit side as well, that not many property investors are aware of, especially in the UK, and the tax advantages. So yeah, I hope you do enjoy the video. And yeah, let's get on with it. Thank you. So, serviced accommodation is a property that is let out on a nightly basis. So it's not a property like a traditional buy-to-let where you rent it out for per month, or you sign it up to a contract for 6 to 12 months and you put a family or a young professional in there. On a long term, that is what I would deem that to be. This is on a nightly basis. You would have seen these properties advertised on the likes of Airbnb, Booking.com, where you pay anywhere from £30 a night upwards of £150 a night, again depending on the areas that it's situated in. But now there is two markets. It is deemed as short-term let property, but there's two markets when I look at it. There's holiday letting, which is more leisure, like for example your Cornwalls, your Lake Districts areas, where families do go to book them for a weekend, week or 2 weeks at most. Very rarely get long length bookings on leisure lets, on holiday lets. So as long as the property is in a a well visited location, for example Cornwall, or the fact you've got the Lake District, Scotland's quite popular as well. That's how that model types of works. Now, with service accommodation, it's predominantly properties that in and around city centres. The main reason being is because that's where the businesses are or their HQs. To give you a couple of examples, you've got the HSBC Bank HQ. They've just moved into the Birmingham city centre area. If it was to look at Manchester, you've got Co-op HQ. And different city centres offer different types of business. And the further north you do go, for example, Sunderland, you've got the Nissan car manufacturers, which you're going to get a lot of people relocating or working in that area for maybe 2 or 3 months and then moving on to the next factory. So, serviced accommodation, we are targeting corporate clients or relocation agents that are sending people from outside of UK into the UK to work on a short-term basis. Now, although I say short-term, we have I've received bookings from the likes of the NHS, and they've been in there for over 12 months. So it's not always 1 week, 2 week bookings or a month booking. You can get short-term relocation agents putting clients into your property, paying a nightly rate, and extending the contract per month on that basis. Now, serviced accommodation, and the reason it is popular is if you owned a business or you was sending staff into a certain location, for example, 2 or 3 months, the only options are, for example, a B&B type of property, bed and breakfast. You're only really going to find them in holiday destinations. I'm sure we've all stayed in them, in, for example, Blackpool or other areas, for example, down south on the south coast. But that's predominantly where you're going to find bread and breakfasts. The other option would, of course, be hotel rooms. But if you try to book a hotel room for the likes of 2 or 3 months, the rates are extortionate for a room and a bathroom, which is what you're getting, and paying a nightly rate of £95 to £100 a night for the full 3 months is extortionate. So corporate clients, for example, do prefer the home from home type of feeling, especially if they're going to be there for a couple of months, and prefer fully self-contained apartments with their own kitchens, bathrooms, lounge, Wi-Fi, all that good stuff. So that's where the market is, and that's why I mentioned that it does work in city centres opposed to out in the sticks. So if you try to buy a three-bed semi-detached house on a housing estate in the middle of nowhere with nothing really connected to it, it's not really going to work for serviced accommodation. And that's not to say all freeholds won't work on serviced accommodation. It really does depend where you are. Um, for example, we had cottages down in the Cornwall area, freehold cottages, and they do work, for example, on holiday lets, but not necessarily for serviced accommodation. So again, to touch on that point, it's predominantly town centres, city centres is where you want to be when you're looking at serviced accommodation. So we're going to get into the figures of what a serviced accommodation would look like if you owned one. Now, all the pictures I've been showing you on this slide have been from our current properties that we've got across the UK. that are easily found online, Airbnb or Booking.com. So this slide is an Excel document that I've extracted from a property that we sold in Halifax town centre. The price was £112,000, full one-bedroom apartment, and it was basically to target the Halifax Bank, the current contract we've got with them, to when they're relocating staff into the area, they use our apartments, which is what they've been doing over the last couple of months. The properties only went live around October, November 2022. So we've only had them for a good couple of months. In this area, we're already achieving around a 74, 75% occupancy rate. With some decent bookings coming in for the summer as well. So, yeah, just to give you an idea, so the occupancy rates vary from 65% as a drastic low. 85% is a good performance, and we have got properties on 100% occupancy. But of course, for you looking at this for the first time, it is good to be conservative, just to give you an idea of what a bottom line return would look like. Now, how we get those occupancy rates in lockdown across the 400 properties we've been managing on this model, we achieved an occupancy rate of 70%, which is our sort of lowest we've achieved across the last 16, 17 years. So 65%, can be quite confident that that's easily achieved. The nightly rate, now, the nightly rates do change throughout the year. I hope people can appreciate that when they're watching this video. You know, they can change from one month to the next, again, dependent on demand and supply. We do increase the nightly rates. We have full control of that because the more money you earn on this property, the more money we earn on this property, which I'll get into in a moment. But £100 nightly rate is the average nightly rate currently in Halifax. And the way we've got that figure is by using a software called dynamic pricing. It calculates all previous months for the last 12 months and what nightly rates was achieved, and that gives us an average throughout the year. So £100 is what to expect throughout the year. Now, the gross income based on that is just shy of £24,000. And then the service charge and ground rent comes in at a fixed cost per year of £626. Now, with leasehold property, I understand that people can be quite cautious about service charges and ground rents. Just like ourselves, I mean, if we're going to manage this property, we need to know that the ground rents are below 0.1% of the price. If it's a higher than 0.1% of the price per year, then we're just not going to look at it. So for this one in particular, you can pretty much say it's going to be below £100 per year for the ground rent. Service charge just over £500 a year. And same with the service charge. When we're looking at leasehold property, we need to make sure where every pound is being spent per year, and that this service charge is audited every single year. What we don't want is, excessively high service charges or things changing from month to month with those charges. So that is a fixed cost per year. The variable costs, you might think are quite excessive, but this includes all running bills, very different from traditional buy-to-let. With serviced accommodation or holiday lets, you do pay for the bills yourself. They're quite easily set up if all apartments are going with one, let's say, for example, British Gas. Then, of course, you're likely to get a deal by using the same provider. The electricity, the internet, these are things that you've got to factor in, which we've put in this cost calculator for you for this particular property anyway. Now, the 19% plus VAT is the management fee we charge. This is based on the gross revenue. So again, if the property is not let out and we've not got a booking in your property, we're not being paid ourselves either. Now, our staff are quite heavily commissioned on these apartments, including myself. So it's in our business interest to increase the nightly rate when we can and increase the occupancy rate when we can on these properties. It just doesn't make any sense. If it was a zero occupancy rate, no one's earning anything, which doesn't make any sense. So this gives us a net return of just shy of £12,500, which gives you a net yield of 11%. Now, we don't factor in mortgage rates. We don't know what rate you're going to get. People choose sometimes to do repayment or interest-only finance to maximise on rental profits and then maybe switch to repayment when the rates cool down or remortgage. So we just don't factor in the mortgage. So if it was to do that based on the higher rates that they are at the moment, around the 5%, you would look at around a yield of 7-8% net based on 65% occupancy. Now, 7-8% net currently in the market, I mean, we're in March 2023, is just not achievable on traditional buy-to-let. If you was to do this on a standard let, you're probably going to achieve £750 a month, and that's likely going to be swallowed up by your mortgage repayment per month as well. So traditional buy-to-let, you're probably netting 1-2% if you're lucky. So short term lets for me, serviced accommodation just makes more sense with the current market conditions. Now the rule of thumb with serviced accommodation, if you want to do it moving forward on any property you look at, I would always go with a cost calculator of between 40 and 45%. Regardless if you use us as a management team or somebody else, that's typically what the costs come up to, because that's including management fees, bills, booking commissions. So yeah, the booking commissions you'll see there are 10%. These are charged from online booking portals, for example, Airbnb, Booking.com. They charge per booking upwards of 5 to 10%. We've got to factor those in. Now, we've been doing this for the last 16, 17 years. We've already got contractors. If we was to take this particular apartment as an example, Halifax is booking accommodation in there. They're not going to use Airbnb, Booking.com. They're going to be using us direct or speaking to us directly. So that's the whole purpose, really, of using a management team like ourselves, is because we've already got quite a number of contractors, or we've already packaged all this up like we did with this deal in this area, because we know we've already got a demand there before we even say yes and agree to manage it. So we've got to factor these booking commissions in. That's if you do get the odd booking through Airbnb and Booking.com, you are going to be charged it. Now, the tax advantages, no, I'm not an accountant, so I would seek advice yourself, but most of our investors do love serviced accommodation because of the advantages it offers. For example, as you can see, all these running costs on this document and the management fees of 19% plus VAT, these are tax deductible. So when you do your tax returns per year, you can offset all running costs on that are associated with this particular property. You're effectively promoting UK tourism, so it does come with benefits. And there's other ways of setting up. For example, I do have investors who do buy properties through limited companies and pay corporation tax, opposed to putting this into your personal income and being charged at a higher tax rate, for example 40%. Again, depending on your income. I probably would say, obviously, of course, get advice from an accountant just to see where you're at and what best method. Is it better to put it in your own name, or is it better to do it through a limited company? There are also finance products out there when purchasing through a limited company, just as much as they are in your own name now. It is quite a competitive market. It's the same with mortgages. The rates are virtually the same. If you was to do this on a buy-to-let mortgage or do this on a short-term let mortgage package, which there are quite a lot of them nowadays. Back, 4 or 5 years ago, the rates were completely different. A holiday let package would virtually double the interest rate of what a normal mortgage product was. But now they are pretty much in line with each other. So I do hope you enjoyed the video. I hope it was somewhat educational. We do source this type of property across the UK. It's not just a big profit for our investors that buy through us, but it's a big profit for our company as well on the management side. So it gives you that reassurance that when we are selling a property, not just to sell it, but when we also offer our management, you can be assured that we've already targeted what corporate clients we're going to use, or existing corporate clients that we've already got agreements with. So yeah, please do click a like on the video, subscribe if you wish. I do launch these videos from time to time, educational, and the odd property deal I do throw up there as well in different videos. So yeah, hope you enjoyed. Thank you. Speak soon. Cheers.